Hi, this is Paul from globaltradingsoftware.com, and I want to go through this week, starting the 28th of February 2022, just on one of the instruments for trading the range breakout. So I'm looking at RTY, Russell, very great instrument to trade, not just with our range breakout, but also the xBrat algo. But this is the week in the life of that RTY using the ThinkorSwim version of our xBrat range breakout. So I'm going to go through every trade, when you should have taken the trades, when you shouldn't, how to have managed it, and everything like that. So what I've got on the chart here is the ThinkorSwim version again of the xBrat range breakout, but also the manager. The manager is very important here to manage these trades. Sorry. So the manager is set on aggressive because these are breakout trades. So when we go to the manager here, we click on the settings. Day trading aggressive is what we need for when we're using these range breakout trades. Plus also, when you're looking at these range breakout trades, you can say, right, I'm happy just to take those with RTY 100 or 200 tick profit targets, and you can use that quite well. And the automated trading strategy that we will develop over the coming years will have those options in there. So let's start off on the 28th. We've got the London Open. Now, not everybody's open for the London Open, but this range is defined. It's green, so you're only looking for long. So when it initially first comes out to the short side, you ignore that. But then when we break out to the upside, we are looking for the long. Now, the previous Friday's New York session range is still there. So if you wanted to be more conservative, wait until you get your entry out of that range there. Then you're using the manager on the ribbon here. When the ribbon turns red, which is here, you take the profit. Or going into that New York session, if you've traded that range, it's about a 200 tick move, take the profit, wait for that volatility in that first 15 minutes when the New York Stock Exchange opens. Notice that the range is defined, the opening range, but it's also green, so you're only looking for the longs. And this long breakout here was a 250 tick move. Okay, came back down to test that opening range and then went back up overnight. We go into the next day. The London opening range is green. We're only interested in longs. We didn't take the short, but that's the rules. Comes back down to test the previous New York Stock Exchange opening range, finds support, and then we go in to the New York Stock Exchange opening range. It's cut. The bias of the opening range is red, so you're only looking for the shorts. So that following candle, you go short and it comes all the way down, until we actually then get that ribbon turning green and you take your profits. The ribbon is on the manager. The next day, London Open, the bias is red for that opening range. We don't take the long. It's the simple rules, because you just don't know if it's going to continue or not. We go into the New York Stock Exchange opening range. It's green. We look for the long breakout and away it goes. Again, taking the profit when the ribbon on the manager turns red. Next day, this is a prime example. Okay, so we go here, we get that only wanting longs. Okay, comes out to the downside, comes back up towards that New York Stock Exchange open. You're not going to take that long unless it's for a quick 30, 40, 50 tick scalp, because you're so close to that New York Stock Exchange open. The New York Stock Exchange opens, big red candle, the bias is red, you're only looking for that short breakout out of that opening range, boom, away it goes, and that's probably 300 tick move. It comes back up, and we don't go green, and comes back down until this point here where we take the profit. And then we're coming to today. We have the London Stock Exchange open. We've got a green. We're only interested as long as it's come out to the downside, so we're not taking that trade. It's just about following those simple rules. There were no losing trades this week following those simple trading rules. So this combination of the xBrat range breakout to define that opening range, that 15-minute opening range on indexes, both London and New York Stock Exchange, giving you the bias for that range, so telling you you're only interested in the longs or the shorts and following those rules. Now, how to manage that trade, there's two ways to do it. Select 100 ticks, automate that profit taking and just take those 100 ticks every time, fine. Or if you've got time to sit in front of that computer, use the manager to manage that trades to maximize those profits. So as you can see, for this week there has been no losing trades following those simple rules that I've talked about, using this simple but very effective trading indicator on the ThinkorSwim platform. It is available for other platforms as well. I just wanted to go through and go, that week in the life of the xBrat range breakout, using it sensibly, using the rules, and no losing trades. So hopefully that helps. Speak to you all really soon.